Let's go ahead and take a walk real quickly down memory lane to some of the key moments in the path that inflation has taken over the last 20 months now. Starting back in January of 2021, when President Biden was inaugurated, inflation was sitting at about 1.4%. At the time, Biden said that U.S. faced a deep economic crisis and proposed a $1.9 trillion stimulus. On February 23rd of 21, inflation rose to 1.7%. At the time, Jerome Powell is quoted saying, "I really don't expect we'll see a situation where inflation rises to troublesome levels." On March 11th of 21, Biden signs the $1.9 trillion stimulus known as the American Rescue Plan Act, and inflation creeps up to 2.6%. Around the same time, former Obama Treasury Secretary Larry Summers then predicted major recession and years of high inflation and unemployment. But Treasury Secretary Yellen disagreed. She went in and said that is there a risk of inflation? I think there's a small risk, but I don't think it's a significant risk. Fast forward to June of 21, inflation increased to already 5%. Yellen acknowledged inflation concerns for the very first time. At the time, she said that transitory or temporary factors were causing it and predicted 3% inflation for 21. That's 2021. Around the same time, Fed Chairman Powell was quoted saying, "Inflation could turn out to be higher and more persistent than we expected." On July 19th of 2021, Biden acknowledged some prices increased, but called inflation a result of temporary supply chain issues. He said, "Some folks have raised worries that this could be a sign of persistent inflation, but that's not our view. Most of the price increases we've seen are expected to be temporary," is what he said. Inflation at that time was sitting at 5.4%. Then on November 10th of 2021, inflation hits a 30-year high at 6.2%. Biden calls stopping inflation a top priority, and Fed Chairman Powell says inflation is not transitory and it's probably a good time to retire that word. Things would go from bad to worse in February and March of this year, with inflation rising all the way to 8.5%. As we know, Russia invaded Ukraine in February, and the West responded with broad sanctions. And those sanctions then led to price increases on oil and natural gas and cooking oils and grain. And then on March 16th of 2022, the Fed raised interest rates for the first time in an attempt to slow down the economy and bring down the inflation. On June 15th of 2022, after having seen very little effect with their first rate hike, the Fed decided to raise its benchmark interest rates by 75 basis points, which was the Fed's most aggressive rate hike since 1994, folks. And at this point, inflation is sitting at 8.6%. Then in July of this year, inflation hits 9.1%, which was a 41-year high. And Biden calls this level of inflation unacceptably high. The Fed took steps by adding an additional 75 basis point rate hike during its July 2022 meeting. And since then, inflation has been able to stall out a little bit, falling to 8.5%. The fact that we've seen a decrease, albeit a small one, is a good sign, as controlling inflation rapidly is critically important, as expectations for inflation could turn into a devastating self-fulfilling prophecy. The role that the public's inflation expectations play in inflation overall is really unknown because it's extremely difficult to quantify that. But the good news here is that it does appear the Fed has not lost its credibility right now at this point, making the public's inflation expectations less of a risk moving forward. But not everybody's convinced that the Fed has things under control. Curious what your thoughts are. Is the Fed doing enough to combat inflation, or are they merely making matters worse? Let us know in the comments below. Let's have a dialogue about this, folks. Also want to encourage you to understand that inflation is not going to all be bad as long as you're playing your cards right. I'm going to be releasing an upcoming video showing how inflation can help you if you're the recipient in the matter, because rising prices are happening universally, and that means that you can certainly benefit. So make sure to not just like this video, it helps us a lot with the YouTube algorithm, but also consider subscribing so you get notified when that video launches. Share the video with anybody you think this might help. And until we see you on the next video, make it a great day today, and more importantly than anything, keep on cash flowing. We'll see you on the next one.